Hearty welcome to the Debit and Credit Online Classroom. In today's class, we can discuss about the interest on capital. Interest on capital is allowed to compensate a partner for contributing capital to the firm in excess of the profit sharing ratio. Like the interest on drawings, it is also computed at the agreed rate with reference to the time capital has been used in the business. Interest on capital is computed on the opening balance of partner's capital. No interest is allowed on partners' capitals unless it is expressly agreed among the partners. When the deed specifically provides for it, interest on capital is credited to the partners at the agreed rate with reference to the time period for which capital remained in business during a financial year. Interest on capital is generally provided in two situations: when the partners contribute unequal amounts of capitals but share profits equally, and where the capital contribution is same but profit sharing is unequal. So, to compensate these situations, this interest on capital is provided. And it is compulsory that in the agreement this clause has to be included. Otherwise, the partners won't get a interest on their capital. Moreover, this interest on capital will be allowed only when there is profit. If it is given in the deed, then this interest on capital has to be a charge against profit, then we have to give the interest on capital. So in the first case, it is an appropriation from the profit and it will be shown in the profit and loss appropriation account, and if it is a charge against profit, it is shown in the profit and loss account. Now let us see the accounting part of the interest on capital. Interest on capital is a nominal account. So according to the rule, all the expenses has to be debited. So interest on capital has to be debited. And the partner's capital will be increased with this interest on capital. So the liability increases, so partner's capital account has to be credited. Then entry will be interest on capital account debted to partners' capital or current account. And for closing the interest on capital at the end of the accounting period, we have to transfer that to the profit and loss appropriation account. Then the entry will be profit and loss appropriation account debted to interest on capital account. Alternatively, in the place of two entries, by passing a single entry, we can bring this effect, that is profit and loss appropriation account debted to partners capital or current account. Now let us work out a problem. This problem is taken from the NCERT text of class 12. Sunflower and Pink Rose started partnership business on April 1st, 2014 with capitals of Rs 2,50,000 and Rs 1,50,000 respectively. On October 1st, 2014, they decided that their capitals should be Rs 2 lakh each. The necessary adjustments in the capitals are made by introducing or withdrawing cash. Interest on capital is to be allowed at 10% per annum. Calculate interest on capital as on March 31st, 2015. When you get a problem like this, you have to read at least 2 or 3 times and find out what all figures have given and from where we have to start and what should be the final answer. So there should be a flow chart in your mind. Only then you can plan the problem and do within the minimum time. So here Sunflower and Pink Rose, they have started the business with 2,50,000 and 1,50,000 respectively. But after 6 months they have decided that their capital should be 2 lakh each. So then from that we can understand that Sunflower can withdraw 50,000. At the same time, Pink Rose should bring 50,000. Then there is a withdrawal from the capital as well as additional capital to be brought. Then next is interest rate, that is 10% is given. So how we will do it? That is the question. And we know that the interest on capital will be allowed for the period which this capital is in the business. So in the case of Sunflower, up to 1st October there was 2,50,000, and from 1st October onwards only 2 lakhs. So for first 6 months we have to calculate on 2,50,000 and next 6 months on 2 lakhs. So let us calculate. Interest on capital up to October 1st. That is 2,50,000 into 10 by 100 into 6 by 12, because only 6 months. That is equal to 12,500. Interest from 1st of October on 2 lakhs. 2 lakh into 10 by 100 into 6 by 12, that is equal to 10,000. So total interest on capital of Sunflower is 12,500 plus 10,000. Then amount to be brought in by Pink Rose to make her capital 2 lakh is 50,000. So till 1st of October he has only 1,50,000, and either you can do in one way, that is calculate the interest for 1,50,000 for 1 year and for 50,000 for 6 months separately, or you can calculate the interest up to 1st of October on 1,50,000 and from October 1st on 2 lakh. Both ways are correct. Now I have done the first method, that is I have calculated the whole year's interest for 1,50,000, that is 15,000. Then on additional capital of 50,000, then that is the interest is 50,000 into 10 by 100 into 6 by 12, that is 2,500. So the total interest will come to 17,500. I think you have understood how the calculation is done. Do it once more and do the similar problems. So the interest on capital is allowed on the opening capital. Sometimes this opening capital figure will be missing. So next topic is how to find out the opening capital and interest on the capital. If a partner has not withdrawn capital or not introduced additional capital during the year, closing capital of the previous year will be the opening capital. That is, the withdrawal from the capital or the introduction of additional capital will affect the balance. So if it is not done, then opening balance of capital and closing balance will be the same. Now let us see how we can compute if opening capital is not given. We can do it in two ways, that is preparing a statement or preparing the partner's capital account. We'll start with the closing balance. The closing balance of the capital, add withdrawal from capital if any, less additional capital introduced during the year, then you will get the opening capital. That's the case of the fixed capital method. And in the case of fluctuating capital, the adjustments are done in the capital account itself. So let us see. Capital at the end of the year to begin with, then add drawings against the capital, drawings against profit, interest on drawings, share of loss. Less additional capital introduced, partner salary, interest on capital, share of profit for the year, then you will get the capital in the beginning of the year. Why we are doing like this as with the opening capital, if we are withdrawing, then that will decrease our balance. All the withdrawals will decrease the balance of the capital. Interest on drawings will also decrease the capital, and share of loss also will affect adversely. So that we have to add back. Then why we are subtracting the additional capital or partner salary or interest on capital, share of profit, because they have increased the capital from the opening capital. So that has to be subtracted. Alternatively, we can find out opening balance of capital by preparing partner's capital account also. This will be easy for you because you have already learned how to prepare the partner's capital account. On the credit side, we'll have whatever adjustments which will increase the balance of the capital, and on the debit side we'll have whatever that will lessen the balance of capital. Let us see how we'll do it. By balance brought down, that figure is missing, so put that as blank. After getting the balancing figure, we can add it. Then on the credit side, capital introduced, if any, interest on capital, if any, partner's salary, by profit and loss appropriation account, that is share of profit. Then on the debit side, you will have the drawings against capital, drawings against profit, interest on drawings account, any loss incurred, and the balance, the closing balance which is given in the problem. Then balance the account, and that balancing figure will be the opening capital. Now let us do another problem. This is also taken from the NCERT text. On March 31st, 2014, after the close of accounts, the capitals of Mountain, Hill and Rock stood in the books of the firm at Rs 4 lakh, Rs 3 lakh and Rs 2 lakh respectively. It was discovered that the interest on capital at 10% per annum had been omitted. Profit for the year amounted to 1,50,000 and partners' drawings had been Mountain 20,000, Hill 15,000 and Rock 10,000. Now let us see how we can do. We are going to find out the figure of the opening capital. So on the credit side, whatever that will increase the capital will be shown, and on the debit side, whatever that will decrease the capital balance will be shown. Okay, so the figures given are Profit and loss account balance is given as 1,50,000, which we have to divide among the partners. No profit sharing ratio is given, that means we have to assume that they are equal partners. So 1,50,000 divided by 3, 50,000 each. By profit and loss appropriation account, 50,000 in all the 3 amount columns on the credit side. Then drawings as given: Mountain 20,000, Hill 15,000 and Rock 10,000. It will be shown on the debit side. And closing balance of the capital is given as 4 lakh, 3 lakh and 2 lakh. Now we can balance the account, and balancing figure will be the opening capital. We'll get it as Mountain 3,70,000, 2 lakh, Hill 2,65,000 and Rock 1,60,000. We know that the interest on capital will be charged on the opening capital. Now we have got the opening capital. So interest on capital is equal to opening capital into interest rate by 100. Interest on capital of Mountain's capital is 3,70,000. So 3,70,000 into 10 by 100, that is 37,000. Of Hill, his opening capital is 2,65,000. So into 10 by 100, that is 26,500. And Rock 1,60,000 as the opening capital, and 10% of that is 16,000. So the answer is Mountain 37,000, Hill rupees 26,500 and Rock 16,000. Do more and more problems so that you will be thorough with the problems, and it will minimize the time consumption, which will be good for your examination purpose. Thank you very much. If you have not subscribed my channel yet, please subscribe it. And if you have liked my class, please share with your friends and also give in comment box. Thank you very much.